Yes, yo. Hello, guys. This is David Kabib on the building, and today I have an intriguing and interesting topic to discuss with you guys, and it's something that's going to be magnificent. It's going to blow your mind off. All right. For every upcoming trader and every advanced trader, this is very imperative that you need to understand this particular topic that I'm about to throw out to you guys. All right. And if you pay rapt attention to what I'm about to shoot out to you guys today, trust me, you're going to sharpen your technical ability in forex trading. And this topic is none other than Japanese candlestick. I know you guys have heard about Japanese candlestick, and you must have maybe a kind of peripheral knowledge about it. But here I'm going to dissect, bisect, and elaborate deeper about this particular technical tool. Is very, very important tool and imperative that every forex trader, as a beginner and an advanced trader, you must understand this particular forex tool. All right, the forex market as a whole is being represented by either a line chart or by a bar chart or a candlestick chart. Now, the candlestick chart is very powerful technical tool. So without further ado, sit back, relax, and you listen to me carefully with rapt attention. You'll be able to understand how this works out. So I'm going to be taking you through what candlestick is all about in forex trading. A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and closing price of a security for a specific period. When you hear the word security, it simply means pairs, maybe a pair maybe like US dollar versus Great Britain pounds, or US dollar versus maybe Japanese yen. But in this context, I don't want to put up your mind with a lot of complexity. All I do is to simplify this forex into a barest minimum language that even the common man out there can actually understand. So the candlestick as a whole is just made up of just the body and the wick. Now the wick are actually known as the shadows, or you call them the tail, while the body is just a kind of, when it's a body, it's a body. Now the body can actually have either an open or a close. Now I don't want to say things theoretically, I want to see how you can see it practically. So let's see how it looks like. Now this is how it looks like. We call it the candlestick anatomy. Now the candlestick anatomy is made up of either a bearish candle, which is also known as the sell candle, or is made up of the bullish candle, which is also called the buy candle. Now, like I mentioned earlier, I talked about the body. Now this is the body here. At the end, at the extreme end of a particular candlestick body is either it's going to be a close or it's going to be what? An open. So when you see an open from the bottom and closes at the top, we call it a bullish candlestick or a buying candlestick. Now you can see the wicks I'm talking about. The wicks are either the top wick, that's the upper wick, or the lower wick. The upper wick is actually known as a shadow, or we also call it tail. Understand? This is actually applicable in both the bullish and the bearish candlestick. The only difference between the bullish and the bearish candlestick is where the close and the open appears at the body of the candlestick, the anatomy of the candlestick. Now, you can see from the bullish candlestick, the open starts from the bottom and closes at the top, while for the bearish, it starts from the top and closes at the bottom. Just come closer and look at the diagram, and you're going to understand this perfectly well. Now let's proceed and let's look at how this candlestick patterns can actually help a trader to understand if he is to go on a buy or is going to go on a sell. Now in this slide, we're talking about the candlestick patterns. Now the candlestick patterns are actually three. They are either single pattern, dual pattern, or triple pattern. Now it does not matter if it's single, dual, or triple. What matters is, does this candlestick tells you when to buy and when to place a sell order, or does it tells you if the market is going to go bullish, that's going to be going uptrend, or it's going to go bearish if the market is going to come down? Now, I'm going to do this particular teaching in a practical terms, where I'm going to be taking you through some types of candlestick where you're going to see this particular candlestick patterns, and you're going to understand this market is going to go up or this market is going to come down. Let's go straight to the point. Keep your ears down as we take the first candlestick. Now, the first candlestick that we are looking at here is actually called the hammer and hanging man. Now, you already know, like in a symbol, how a hammer looks like. Now, you can see from this diagram, this is how the symbol of a hammer looks like. It has a body, and that's what a shadow. The shadow it has here is it's a lower shadow. Remember, I told you how the candlestick body here, there is no upper shadow, only the lower shadow that appears, but it has a body, but the body is a bit smaller. Now, this kind of candlestick are actually called either hammer or hanging man. The hammer candlestick is actually for the bullish trend, while the hanging man candlestick is actually for the bearish trend. When you see this particular kind of candlestick, it means there's going to be a reverse in the trend of the market. Remember, in Forex, is either the market is trending up or the market is trending down. Now, if there is a downtrend, as you can see, all of a sudden you now see this hammer candlestick appearing at that downtrend. Just know that there's going to be a reverse of the trend, and the market is about to start shooting up, to start going up, meaning it's going to go bullish. So when you see this kind of candlestick appearing in a downtrend, it means the market is going to change trend. The reverse is the case when you see this kind of candlestick at an uptrend. When you see an uptrend and you see this kind of candlestick, it means the market is going to reverse downwards. It's going to come down. Now, in that case, we call that a hanging man. That is quite understood, right? Look at it clearly again before I move to the next slide. Now, the next slide. In the next slide, we have what is called the inverse hammer or the shooting star. Now, guys, the inverse hammer is just the opposite of the hammer we just discussed. All right. Now, the inverted hammer, like I said, is the reverse of the hammer itself, while the shooting star is the reverse of this particular one we just talked about, the hanging man. Do not forget. Okay, I'm just trying to refresh your head. So when you see an inverted hammer, it means when the price has been falling, suggests the possibility of a reverse. Its long upper shadow shows that buyers try to beat the price higher. So when you see an inverted hammer in a downtrend, it means the market is about to change direction and start to go up. In such case, it means buyers are about to take over the market. Then if the reverse is the case, when you see a shooting star, when the buyers are about to and the sellers are about to take over the market in an uptrend, you see a shooting star hammer appearing at the top. When you see that, it means the sellers will take over the market and the market will start coming down. So look at it again clearly. I said the inverted hammer is when the buyers are taking over the market and the market is about to shoot up, while the shooting star is when the sellers are taking over the market and the market is about to come down. Hope this is clearly understood. We are making progress. Then the next kind of candlestick we have here is called the doji pattern candlestick. Now, the doji pattern candlestick, as you can see, it's made up of a lower shadow. We call it shadow or wick or tail, and a smaller body. Okay, this is how the doji candlestick look like. You can look at it here in this particular diagram. All right, it also shows that it's going to be a reverse of a trend. Listen, this is a reversal candlestick. When you see a doji candlestick appearing at a trend, a doji candlestick appears like in a trend, means that particular trend is about to change. Like in this case here, we have a downtrend. because there was red candlestick going down, because they are representing red candlestick going down, all of a sudden a doji candlestick appeared, meaning it's about to change to go uptrend. If you see a doji candlestick appearing at the top of an uptrend, what does that tell you? It tells you the market is going to reverse and start coming down. In this case, the buyers are taking over the market and the market is about to shoot up. So look at it closely again. I take what is written here. The doji pattern is a candle that has long tails and small bodies, and the market opening and closing price are same, okay? At the same price. Both indicate a reversal pattern. So when you see a candle, a doji candlestick, it actually means there's going to be a reversal candle. There is a reversal there in this trend. Here we have already explained that there's the reversal now, because a downtrend before it starts shooting up. If it's actually also appearing at the top, it means the market is going to come down. All right. Okay. Look at it here. In an uptrend, you can see the market is going up. It has green candles, means the market is going bullish. All of a sudden, a doji candlestick appeared. Another doji candlestick appeared, and the market starts going down. Now, this doji candlestick, as you can see, it can either be in this form, or it can actually be in this other form. You can see this bullish doji candlestick looks as if it's like the previous hammer, but it's just the body is smaller. While this bearish doji candlestick looks like the inverted hammer, it's just the body is smaller. So you can see these things are actually interchangeably. All right. So do you understand this? If you do, let's move to the next one. The next one we have here, we actually have the engulfing candlestick. This is a very important and very important candlestick. Now, the engulfing candlestick can either be a bearish engulfing candlestick or a bullish engulfing candlestick. When they say something is engulfing, it means something is overwhelming. It's overwhelming the other one. So in this case, we can have a bullish candlestick overwhelming a bearish candlestick, or we can also have a bearish candlestick overwhelming a bullish candlestick. So here we have the bullish engulfing pattern is two candlestick reversal pattern that signals a strong up move may occur. Then the bearish candlestick actually indicates when the bullish candlestick is immediately followed by a bearish candle that immediately engulfs it. This means that sellers empower the buyers and that a strong move downward could happen. Now look at this diagram here. The first diagram shows you a bullish engulfing candlestick at the bottom of a trend, a downtrend. Meaning that there was a downtrend. All of a sudden, there were two candlesticks. You can see the first candlestick there. The first candlestick is smaller, while the other one following it is bigger. It means it has engulfed the previous one. There was a downtrend candlestick. The one colored black is actually a bearish candle. But all of a sudden, a bigger candlestick, which is actually a bullish candlestick painted white or in white color, engulfed the previous one, which is the one in a bearish form. So it means it has swallowed the smaller one. Now the candlestick that swallowed the other one matters. In this case, we have a bullish candlestick swallowing a bearish candlestick, meaning the market is about to reverse upward. Now, the reverse is the case in the next diagram, where we have a bullish trend, market going up. All of a sudden, a bigger candlestick, which is a bearish candlestick, has swallowed the smaller candlestick, which is bullish, meaning the market is about to go down. So, a bearish candlestick looking bigger has actually overshadowed that of the bullish candlestick. So we have a bearish engulfing candlestick, meaning the market is about to go down. The sellers have taken over the market. Okay, so buyers taking over the market, we have an engulfing candlestick. Sellers taking over the market, we have a bearish engulfing candlestick. Is that clear? Yeah, we're actually approaching towards the end of this, but let's take this 2 to 3 more candlestick and before we can actually come to an abrupt end. Now we have the tweezers. A tweezer is actually a three or triple candlestick pattern. Okay, it's made out of 3 candlestick. Now it's usually spotted after an extended uptrend or a downtrend, indicating that a reversal will soon happen. Most of these candlesticks are actually going to show you if it's going to be a continuous trend or it's going to be a reversal trend. Now look at this diagram, the first one. In the first one, you can look at it very clearly. You will see the tweezer at the bottom. All right, you can see the tweezer candlestick. As you can see, they actually 2 candlestick here. 2 candlesticks. Sorry, I made a mistake. I didn't make triple. These are 2 candlestick here, and these 2 candlestick here, they are same, but one is a bearish candlestick while one is a bullish candlestick. You can see you can see the diagram clearly. I'm trying to zoom the picture of it so that picture of the candlestick pattern so that you can understand it clearly. As you can see where it's been cycled. You can see where I cycle it. This is how a tweezer looks like. Now the first candlestick, which is the black one, is actually the bearish, while the other one followed by the bullish candlestick, which is the white one. So 2 candlesticks like this that are same like this indicate what? A tweezer. Yes, sir? But this is a bullish tweezer. Okay. Then if you are looking for the other tweezer, you can see the other tweezer. You can see the reverse, how it looks like. This is a bearish tweezer. If you see this kind of candlestick, it means the market is about to change trend and start going down. Very, very important. I hope you are looking at this closely. You are seeing it closely. All right. So the tweezer is made up of 2 candlesticks that are similar. They are similar in nature, just that it depends if the candlestick that follows the first one determines if it's going to be a bullish or it's going to be a bearish. Like I said here, this is a bearish. This is a bearish, as you can see at the second diagram, while the second diagram here, the second diagram here, this is the bearish, while the first diagram here, this is actually the bullish. All right. So guys, let's move to the next one. Okay. And next one we have here is actually the Haramic patterns. All right, the Haramic pattern candlestick simplify like an inside bar. They call it an inside bar. Okay, it's called an inside bar. Now in Japanese, harami simply means mother and child. Mother and child means, you know, when a mother is pregnant, she's carrying a baby. So in this case, this Haramic candlestick shows a big candlestick with a smaller one beside it, showing that smaller one is the baby, while the bigger one is actually the mother. So if the bigger candlestick is a bearish candlestick, while the smaller one, which is the baby, is actually a bullish candlestick, it means the market is about to reverse to go upward. This is an example of of a bullish Haramic candlestick. It's very, very simple. The baby, which is the baby, is taking over from the mother, because the mother have been going through downtrend, which is the red candlestick. As you can see, all of a sudden she gave birth to a baby, and the baby she gave birth to is bullish. The market is reversing. I'm using a layman's language to make you understand this. Now look at it. This is actually also the bearish Haramic candlestick. Here, the mother gave birth to a bearish candlestick. The mom is a bullish candlestick here. All of a sudden, she gave birth to a smaller baby, you understand, which is actually a bearish candlestick. So the market has reversed. It has changed. Generation have changed. There is a change of trend from a bullish trend to to become a bearish trend. I hope this is understood. Take a look at it again. Take a look at this, how the mother gave birth to a bearish candlestick, which is the Haramic. Gave birth to a bullish candlestick where you have the bullish market is going up, and where she gave birth to a bearish and the market is coming down. Very, very simple. Then we look at also the morning star, which is the next candlestick. I said the evening star, which is another call, is actually a triple candlestick pattern that can usually be found at the end of a trend. Now this morning star or evening star is actually what we call them. We call them morning star or evening star candlestick. They are three candlestick, 3 pattern candlestick, or triple pattern candlestick. You can actually find them at the end of a trend, or at the end of a trend, yes, either at the top as a downtrend, or at the end of an uptrend. So if this is a downtrend and it's about to come to an end, and you see this particular 3 types of candlestick here, you can see them here, the triple candlestick here. Look at it. Let me zoom it very well clearly. As you can see, this is a morning star. As you can see how it's made up. Look at the picture very well. If from picture you're going to understand, it means the market is about to go bullish. Then in the evening star, the market is going evening, as what means, it means the market is about to go down. Just that when the sun is rising and when the sun is set. Okay, now the sun is getting set here. That's the evening star. The market is about to go bearish. Look at it. Look at the picture clearly. When you see 3 candlesticks that looks like this, it means it's an evening star and the market is about to go down. Okay, you can see what is made of here. Let's look at it. I'm zooming the pictures clearly so I can see the triple candlesticks. Then here you see also the triple candlesticks. If that is understood, that is clearly understood, then we can proceed and go to the next page. We are gradually coming to an end. Now, the last candlestick here we're talking about here is actually called the 3 white soldiers. These 3 white soldiers are very important. They are also triple candlestick, and they can also show a change of trend or a reverse of a trend. They can appear actually at the top of a trend, that's an uptrend, or at the bottom of a downtrend. When you see them appear at the bottom of a downtrend, it means there's going to be a change. There's going to be a new change of trend from the bottom. You see them at the bottom, means there will be an uptrend. If you see them at the top, it means they're going to be a downtrend. Okay, the 3 white candles pattern is formed when 3 long bullish candles follow a downtrend, signaling a reversal has occurred. They also call them 3 crows, 3 black crows. That's what they call them, 3 black crows. Now, for the 3 white here, look at the 3 white here. It means it's going to be a bullish candlestick. Look at that. Look at it here. Then the 3 crows are 3 black candles here. For bearish candles, mean the market is going to go down. So if you see them like this, it means one is for what? Bullish, while one is for what? For bearish. Okay. So look at it closely and read what it is. Just take your time. Look at it. We have the 3 white soldiers and the 3 black crows. The 3 black crows is formed when 3 bearish candles follow a strong uptrend, indicating that there is a reversal in the works. Okay. Now we have explained what the 3 black the 3 black crows is and the 3 white soldiers is. The soldiers are for the bullish, while the crows are what? For the bearish. So if you really understood what I just said right now, take a look at it again closely and you get to understand from the diagram. So hello guys, I don't have anything much to say from here anymore, but I believe as a trader, your perfect understanding of this candlestick will sharpen your accuracy to predict the market if you're going to place a buy or you're going to place a sell order. It's very important that you understand these technical analysis tools as a trader if you really want to maximize and take profit in the forex market. I remain your boy David Capable, so you can click and ensure that you subscribe, and also you keep track of my record of other videos I have here and for your educative purpose. Thank you so much. David Capable in the building.